And now we are moving to the line chart. Okay. So this is the line chart. This line chart what shows us, look at, the price is moving in any direction. In this line, this is the price line. Okay. This price is moving. It's moving in any direction. Sometimes it's going up, up, and sometimes it's going down, down. Sometimes it's up and down, up and down. It means we find three ways in the price. One price is going in up price, okay? In up direction it's going. One price is moving in down direction. And one price is moving look like this the direction. So we find three things. One thing, we find the price. It means we find price. This line shows the price. Price is moving. And price, after that we find the price is moving in one direction. If this direction, it is downtrend. If it's going upward, it's uptrend. If it's moving in between range, it's moving in the range. Yeah. So range, it means range in market or sideways. Okay. Another thing, just we follow this. When price is moving, it means when price is moving, time is running. Okay. If price is moving, time is running. Look like that. So just we another finding, there was the time. So price when moving, time is running. And when price is moving, it makes a trend. Sometimes price moving upward, it means it's making an uptrend. Sometimes price moving downward, it means that it's a downtrend, it's going down. Sometimes it's moving in the range, look like that. So it means that this is the range. It's the sideways. When price moving up, touching this area and going down, touching this area, going down, down, up, look like this. So in the market, we find three trends. One trend is uptrend, one trend is downtrend, and one trend is ranging market, ranging trend. In the ranging trend, only price follow the two ranges, and when it's coming on any one rank, this rank pushes the market and going down. Again, this rank pushes the market, it goes up. So this market is going to look like this. So just we identify here, there are the three trends. One is uptrend, one is downtrend, and one is trending. So now another thing, who moved this price? Look like this. Who is moving this price? Is it running automatically or with the computer, or who is running this price? This price line is running with two forces. These are two forces. One for buyer and one for seller.
Mr. Saw, your voice is not as clear as yesterday. I don't know what is the issue. Issue is this
My voice is not clear. Now
now,
what?
now it's so much better.
Okay. I just
Yeah,
replaced the mic, and now I think it's good.
yeah.
Okay. So
Okay.
who is moving this price? The price is moving by these two forces. Okay. The one force is buyers and the one force is sellers. So now when we know that these are only two forces which moving the price, then we must understand the psychology of buyers and psychology of sellers. So what the buyers think and what the sellers think. So if we understand the psychology of buyers and sellers, then we can continue to the next step. So the psychology of buyers is they move the price in the up direction always. It means when price is here, if there is a buyer, so buyers hit the price and it will go up. And if we find the seller psychology, sellers always price push down. When they price push down, they get the profits. When buyers price push up, they get the profit. It means the habit of the sellers and buyers is pushing the price in any direction. So when buyer buy the stuff here, when price goes up, they get the profit. When seller sell the stuff here, it is goes down. It means this is the uh, a seller reaction and sellers getting the profits. So in the market, we only find these two forces and the habit of the sellers and the buyers we find. So when we see the price is come to this level and goes down and come to this level goes up, come to this level goes down. Why? Because of these two forces. Okay, they can be available at every place, everywhere. The buyers and sellers can be available in this chart. It's on every place, everywhere. It means price is going down, so the habit of the down is sellers. So it means there is a sellers. Sellers are sitting here. When price come to this level, they sell their stuff and price going down. The price is going up, it means there is a buyer sitting in this area. And when price come to this level, it going up, it means buyer buying the assets. So this is the process of buying and selling, exchange the assets, values. This is the process of exchanging the values, we're exchanging the assets. Okay.
Yeah.
So now we know that the buyers always push the market up and seller always push the market down. So in this line chart, we understand uptrend, downtrend, ranging, price, time, buyers, sellers. So when the how we can recognize that where are the sellers, where are the buyers? These are the levels. We can say these are the levels. These are the levels where we found the reaction. So this reaction shows that from this level, when always price comes to this level, it going down. It means this is the area of the sellers. Okay, area of the seller. This area can be denoted with the this line. Because of understanding, we can denote this area by this line. And this line called by the support or resistance. Okay, support or resistance. So that's why these levels are we are plotting in the chart to identify the area of the buyers and the sellers. And this line shows us support and resistance. Support means support for the buyers, support when buyers start the price from the support and sellers start the price from the resistance. So this line, when price is above and coming to this level, now this we can say this is the support for the buyers. And when price is down and coming to this area again, so we can say this is the now resistance for the sellers. So this line can be support, can be resistance.
Uh-huh.
When buyers and sellers also changes their position. When buyers fail or sellers fail, they change their position. Look at in this scenario, the sellers are here. When the sellers are fail, buyers cross this area. So sellers change their position from this to this level.
Mhm.
And buyers change their position from this to this level. Now buyers are here and sellers are here. When again sellers fail to price push down, they change their position from here to here. And buyers change their position from here to here. When again seller fell from this area, they down, but it's not working too much. It's not going too much down. Again, buyers cross this area. It means now sellers will change their position from where to where, and buyers change their position from here to here. So this is the process of changing the levels. So, but if we count these level can be used for the future. Okay, when price come to this level, it must be reacted look like that. When
Mhm.
price come to this level, because the reaction is appeared here before. When price come to this level again, we just get a line from here. This line shows there in the previous, in the past time, there was the reaction between the buyers and sellers. So maybe can be reacted in these areas. So that's why these lines always working in the future. So these lines give us an idea about the levels where in the past was the sellers, they assert their area, they assert their uh, uh, exchanges and something like that. So these lines we can call as a support and resistance lines. These are the levels where buyers and sellers can enter. But the thing is that when sellers fail, their sellers change their position. When seller fail again, change their position. When sellers fail again, they change position. But they will get any area from here. If you follow, the sellers can push the market down. It means this is the successful area for the sellers. They push the price down. And another thing, how the war is between the sellers and buyers. So if this is the area where price is going to start and the sellers and buyers are available here, okay, if the buyer's force is strong, they will create a high from here to here. If the seller's force is strong, they create a high, lower low in the price. But if the both forces are strong, price will move look like that.
It
And
will
the
become like this.
look like that. When the both forces are same, price start from here going up, again going down, but at the end it close look like that. It means in this area we found this action. Price start from here going up, going down, but at the end it is closed on the opening price from the price starts. So this area says this is the indecision between the buyers and sellers. So we don't know who win the next war. So to follow the next war, if there is a now uptrend, it means buyers are coming from this level to this level. It means buyers are very strong and sellers entry is very due entry. So the force is for the buyers is very strong. So maybe next continue the buyers again because sellers are very weak here. So in this scenario, in this chart, we cannot understand the clear information. Just we get the idea that who is going up, who is going down, where is the level. These levels are not very clear in this chart. That's why we are using the candlesticks. Candlestick is the price. They give us the information about the price. They give us the information, the message about the price of the buyers and sellers activity. So in this chart, we cannot understand. That's why we are using the candlesticks. The candlesticks are very informative. They give us a too much clear message about the market, they, who win the war between the price, between the sellers and buyers. So that's why we are using the candlesticks. So in this area, if we trade in the line chart, sometimes we can win, sometimes we can lose. So it's not sure that the price will again go up, again go down, because this chart, this price line give not us a clear information. So we have to trading for 1 minute or 5 minutes or 15 minutes. So we must use the candlesticks. So now we are moving to the candlestick. That why, how the candlestick can be read, how the candlestick can give us the information, the message. So we must read about the candlestick. That what are they? Do you understand here everything?
Yeah, yeah, yeah. I got it.
Okay. It's a basic, you know, but it's my way that I clear from the basics. These are the basic things. So if anyone asks you question that you have clear about these things, so it's common, very common.
Yeah, it's better.
Yes. Because my ways, I'm starting from the basic. So these are the candles. These candles give us a clear information. In one candle, there are 5 to 6 messages we can read. The message is that if the color is green, it means this is the buyer's candle, because buyer's habit, we studied before that buyers push the price up. So price is opening from here and close here. It means this is the buyer candle. And seller habit is push the price down and opens from here and close to this level. It means this is the seller's candle. And we can recognize from the colors. If the color is green, you are following the green and red color. So the green color is for the buyers and red color for the sellers. So in this candle, we get another messages also. One message is body, because this body shows there the change. This body shows the change. It means one message is body. Another message is open. Another message is close. So when price starts from this level and goes up, it means and close here, it give us a two messages, opening and closing. Okay. After that, there is any other information is still in this. When price start from here, it goes down, it make a low. It means low is the message that sellers enter from this level. They try to price push down, but at this area there was any level, there was a place of the buyers. They push price hit again and goes up, take the price up. So when the buyers start the price from pushing from here to here, they make a new high. But there was a seller's area. There was a seller's place. Sellers are sitting in this area. They again push the price down, but the force of the buyers was strong. Buyers close this area, this price on this area. But at the end, we found the green candle. This green candle shows that the buyers are strong. Buyers win the war. So in this candle, we found the operations of sellers and buyers. Buyers, they're pushing the price down from here. Sellers pushing the price down from here to here. It means in this candle, there are two involvements of the buyers and sellers. These are okay. So this candle give us these information, four messages: open, close, high, low, and body. But we cannot still understand that now next war who can win. This is a just alone candle. In the alone candle, we can identify the candle message. The message, this message can be a 1 minute message, can be a 2 minute message, because when the price is moving, time is running. It can be a 5 minute, it can be a 15 minute, it can be 1 hour or 1 day. Okay. So the time denoted that in the 1 minute price start from here to here and it making a new low or high or close. So this time denoted the price action in during this time. So same for this candle. So now we can understand that the price, this candle give us some 5 to 6 messages while this we find in the chart. So another thing is that buyers opens from below and goes up, and sellers open from above and go down. It means this is the above and this is the bottom, and this is the above, this is the bottom. Okay. So we can now we know that the sellers and buyers open and close are the different in the opposite direction from these both operations. So just we analyze that this is the candle and the candle give us a 5 to 6 message, but we are still not clear. So now we have to going the uh, comparison between the candles, different type of candles, that how we can understand these candles, which is the message, what is the, who is the strong, who is the weak, who is the neutral. So the next step is going to the understanding the candlestick ranges. So these are the ranges. In the candlestick ranges, we can identify the force of any party. It means force of buyers or sellers. So if we found the green candles, just we look into the green candles. So if we find green candles, this green candle shows the only body. There is no any other sign of the below or up. So this candle shows the strongness. It means it's a strong bullish candle. So we know before that when buyers push the market, they push from the down. Okay, they push from the bottom. So if you find a wick, if you find look like these are the wicks shadows. Okay, this wick, this shadow give us information that sellers enter from here, they goes down, but buyers were very strong. They push again and make a close new and strong bullish candle because there's no wick on the above. So this we can say this is a strong bullish. This is also a strong bullish because this candle shows the buyer's pressure, and also a strong body, no pressure on the above side. So these three candles give us information that these are the very strong bullish candles. After a strong bullish candle, we can take the decision that the next level can be go up. Next candle can be go up, but it's still not 100% because there are other rules also. We can combine the all rules, then we can decide. But just if we get the message from these candles, so these candles says that the next candle will go up, next price will go up. Okay, it
Oh,
give us 100% information that the next candle will go up. But in this area, when we find the small bodies and two wicks, in the candle. So 1 wick, 2 wick, small body. This is a very big wick, big tail, small body. These shows that these are the bullish candle, but not the strong bullish. In this candles, when you find these candles, we are now 80% sure that maybe price can go up. Hello, hello.